we kick it off? Brian?
You bet. Let's do it.
All right. All right. Thank you, everyone, for joining us today. We are going to go over an overview of what the Congress passed last week and the President signed on Friday, called the CARES Act. That's the Coronavirus Aid and Recovery Act. It's 883 pages long, and we are specifically going to go over elements that apply to or small business owners. There's aspects of it that you've probably heard about on the news, $1,200 for people that have made less than $75,000. We're not going to address those items. There are calculators that you can access that can figure out those kind of things. But overall, we are going to talk about the business loans and then items for small business owners that are that if they have employees. So the presenters, I'm Colleen McAleer, Executive Director of the Clallam EDC, and
hey, good morning. This is Brian Koo, Executive Director of EDC Team Jefferson. Thanks for being here.
And we want to thank Michael and others that have gotten this organized for us. So first, the legal disclaimer. It's provided as information and educational purposes and doesn't constitute legal or professional advice. We can't address every scenario, of course, and there's a lot of complexity of issues and steps that businesses need to take under applicable laws. And you should first obtain proper legal or professional advice from either an accountant, an attorney, but there are also business advisors that are available to help you, and Brian and I can send you to those individuals. There's the Small Business Development Center, there is the Center for Inclusive Entrepreneurship, there's SCORE advisors. I also have on my board a former bank CEO. Brian and I are available. There's lots of people that are available to help advise you through this process at no cost. But so there are policies that are being developed, and we can't provide you with all the answers, right? Because no one can at this point. Unfortunately, well, because of the time when this was all passed, which was last Friday, the state has not created the laws exactly to handle this, because you had pre-COVID-19 state policy, and then on top of it, then you had the governor declaring a state emergency, and then you had on this March 17th, the Federal Family's First Coronavirus Response Act passed that affected emergency paid sick leave and made changes to the Family Medical Leave Act. And then now you have this Federal CARES Act. So all of these different laws affect one another. And right now, Employment Security Department and other agencies are developing policy on how they all work together. So here's the agenda. Hopefully, okay, it's 10:05. So we're doing a quick overview of this, and then we'll go into these EIDL, which is Economic Injury Disaster Loan Emergency Grants. And that's for LLCs, it's for, and as realtors focus for you all, it's also for independent contractors. Primarily, this likely will, you want to be focused in on this if you don't have employees, but you might have employees and want to take advantage of that program. Then we'll take questions. Then we'll go on to the Paycheck Protection Program loans with loan oops, I should have written forgiveness. And then we'll take questions, and then just a short little blip on the Family Medical Leave Act and the Emergency Paid Sick Leave Act that came from the March 17th new laws. And we've had webinars with Employment Security Department of the state that administers the unemployment payments and applications, and they don't have full answers yet. So just overall, we're providing you with information. We'll get you going in the right direction, but there are programs and questions that have not been resolved yet by our state, or in some cases, the Department of Labor at the US federal level. But there are some things that we can absolutely tell you about, and that's what we're going to go over here. Again, this first part for independent contractors and employers that likely will want to take advantage of the emergency injury disaster emergency grants. So as I mentioned, $2.2 trillion were passed, and the two programs in it that we want to highlight are these, the Economic Injury Disaster Loan, and then they created the 7A Paycheck Protection Program. It's a new type of small business loan under the 7A Small Business Act, SBA Act. So, and generally 7A, these PPP loans, I'm gonna call them, that's the Paycheck Protection Program, they work best for taxpayers with high payroll, especially if they'll use the proceeds to fund payroll costs over the 8 weeks following the date that you make the loan from a bank. So on March 27th, the president signed the act, and so it is the Coronavirus Aid, Relief, and Economic Security Act. And so there's a link there. And again, this website, this presentation and the slides will be available on both Brian's website and the EDC's. Go over the EIDL loans and grants. So they expanded the availability of this dramatically, and they have streamlined the application process. They appropriated $10 billion for this, and the way you apply for this is you go directly to the SBA via the online portal. I created a, I don't know, 4 or 5 minute video on it, on how to go through it. It shouldn't take you more than 15 minutes. It's pretty straightforward, and anyone, any business, whether they're an LLC, a partnership, a proprietor, etc., with not more than 500 employees, so that includes people without employees, all qualify. So even if you're operating as a sole proprietorship or an independent contractor, you qualify.
So Colleen?
Yep.
So as people are deciding which one is going to apply to them, simply put, in terms of for realtors, if you're a realtor who does not have employees, you're an independent contractor, or if you're one of our affiliates and you do not have employees, this is the $10,000 grant that they will likely, that will apply to them and that they'll want to go for.
Right.
And that this money is potentially, will not last forever, considering
Right.
there are $10 billion. There are, if you consider a $10,000 grant, do the quick math on that, that's 1 million people that will be served. And there are more than 1 million people in the US who are independent contractors.
Mm-hmm. And or small business owners, or people that have 12 employees but want that $10,000 immediately. So there's another program for them, but that'll take them 3-4 weeks to get the funds. And so it's pretty important that you get through this process quickly. And I'll update these slides with the link for the, to include the video on how you go through that $10,000 grant. Okay, so EIDL loans. Your approval is based on, were you in business as of January 31st of 2020? And they will, all they're gonna look at for the loan If you want more than $10,000 is what was your credit score, or an appropriate method to establish the borrower's ability to pay. So it's going to be funding that will be easy to receive if you want more than the $10,000. And they have significantly streamlines the approval process. People have been doing the EIDL loan process online. And before this act passed last Friday, it was much more cumbersome, and the rules were much more cumbersome and onerous in order to receive this money. But now they've stripped that all away, and all you have to do was show you were in business January 31st, and then they'll be taking a look at your credit score if you want more than 10,000. So if you want more than $200,000, you don't have to provide a personal guarantee, and the most you can borrow is $2 million. The interest rate is 3.75%, and the maximum term is up to 10 years, and you can defer your payments 6 to 12 months. How can the funds be used if you're getting more than 10,000? I think the most important element, last bullet there, you can use it to repay obligations that cannot be met due to revenue losses. So it also talks about, paying paid sick leave, et cetera, and retaining employees and making rent or mortgage payments. But the big catch-all is the last one, repaying obligations that cannot be met due to revenue losses. So the next slide. The applicants.
Colleen,
Yep.
sorry to interrupt. So the question was asked by Jen Rabinowitz, and this is just trying to figure out which of these programs would apply to her. For a branch manager who is on salary but also sells, will she still qualify?
Yeah, absolutely. If you are a business, less than 500 people, which unless even Westport qualifies there, as long as you're not a government and you're in business and you had a business license, you qualify for this. Now, I'll get to whether or not you want to go through this process or the Paycheck Protection Program. But if you don't have employees, the answer is you'll want to go through this process. But for people that have employees, make sure you stay on, and we'll go through that process, and then you can choose between the two options. So the big, aha, and what people are going to want to do is go for this EIDL loan, and on the in the actual CARES Act, it calls it an emergency grant. So the process is that you go online to sba.gov and you go through the loan process. At the end of that process, that just came out yesterday, by the way, there's a box that you check where you say, yes, I want the advance. So then you'll get that advance of $10,000. And if you only want $10,000, and when the SBA contacts you, you just say, I don't want any more loan other than the $10,000. And if that's the case, then you receive the emergency grant. And there are not any, you won't receive any additional funds. Now, worst case scenario, but I don't think this is going to happen, but the worst case scenario is if you get the money within, and these funds will come to your bank account within 3 days. If they contact you because of all the processing they have to go through, and it takes them 30 or 60 days, they could possibly charge you 3.75% interest on that $10,000 that they granted you. So if that were the case, that logically it doesn't seem like they would do that, but if that were the case and it was 60 days, they could possibly charge you $62. But that means you received over $9,900 for free. So to me, that's the worst case scenario. Again, they are calling these emergency grants. And that was the title of this, this section of the CARES Act. And you go right to that link I provided you in a prior slide and, you know, read it for yourself if you'd like. So, and again, these advances are considered grants rather than loans. They're not subject to repayment, even if later on you ask for, you know, 200,000 and the SBA denies you. And currently these advances are committed to be provided within 3 days after the SBA receives the loan application. My husband did it, and you know, he did it yesterday, and we'll see. You know, we're expecting the funds to be in his Wells Fargo checking account in 3 days or 2 days from now. So this is the question that I think Jen asked. If an idle recipient later refinances into the Paycheck Protection Program, the grant amount that you received would be offset against any payroll related loan forgiveness. So that's a larger program where you can get 2.5 months of payroll for free. And if you get this $10,000 now that you're thinking, I need the funds right now, they will roll that over. They will roll that the 10,000 into your 2.5 month free loan forgiven program, which to me, it's also a grant. Though they don't specifically call it that, they just call it a forgiven loan. And they will then, that will be offset. So if say your monthly payroll was $20,000, you could get $50,000 of funding from the SBA, through the SBA. It's actually through a lender, and then the SBA reimburses the lender. But that $10,000 you received through this program would be subtracted from that $50,000 that you'll receive later on. So you would only get $40,000. Does that make sense? Nod your head if I explained it okay.
Yeah, I think so. There's also the question of, so far I've asked, you know, we do our business banking and we do have employees, and this is the route that we're going to go. And I asked First Federal, and the first response that I got was go, you know, find somebody that is specializes in SBAs. And I've reached out to someone who did an SBA for somebody that we knew, and she said probably try to, you know, she would refer me to someone locally. So far,
Okay.
it seems like it's. I don't know how, well, they're going to be overwhelmed, those people that do SBA loans, but then also SBA is putting out a bunch of specialists, right, that are going to be able to handle this demand.
Yeah, so let me tell you, I've talked to Matt Dinas, the CEO of First Federal. They're going to be doing them. And we're going to get that up on our website, and so will Brian. I'll make sure Peggy provides that. I've talked to Lori Chichimsky, who's a vice president of Sound Community Bank. They are going to be doing it. So is Key Bank. Let's see there. Oh, Kitsap Bank has always done SBA loans. There's also online providers like smartbizloans.com does them as well. But if you want to work with your local bank, you can certainly do that. They will be rolling out these programs. And even if they weren't an SBA lender before, which includes First Fed and Sound Community Bank, they are going to be doing these loan products. I just got that information just yesterday. So, so anyway, back to this, the last bullet: applicants with immediate financing needs may consider applying for an EIDL first, then seek to refinance with the SBA 7A PPP loan program. So now it's time for questions. Do we have any questions? Michael, you're on mute.
Techno peasant, sorry. Clint Thayer asked the question, it may be helpful to ask the group how many have employees versus how many here are self-employed independents. That might be difficult for us to gauge, though I understand why, because we want to target this to benefit the most. I think there's enough people, I'm looking at this list, that do have employees that part is important. But I will say the vast majority are going to be independent contractors. So let's leave it at that. So thank you, Clint. Cindy Teitzel asked the question, so there is no interest or payment due on the 10K?
So no payment due. It is an emergency grant. And Brian, if you want to chime in here, please do. They have not provided guidance on if they would possibly charge any interest on, and the interest rate is 3.75% per year. So Brian, you ought to answer this question as a former commercial lender, but what would that be on $10,000 per month? I'm quite sure it's 3.75 divided by 12 months. So 0.31% or 31 bucks on the $10,000. They haven't said that they are or are not going to charge any interest on the $10,000 that is a grant. I can't imagine that it doesn't seem logical that they would do that, but even if they did, the worst case scenario is they charge you $62, $63 and you get $10,000 for free. Depending on how many months it went before they sent you it'd be $32 a month would be the potential charge monthly. If that,
but we don't think that there will be, right?
I don't think there's going to be, but
yeah.
Again, worst case scenario, I think that's what it would be.
Okay. So Catherine Cote asked the question, will the grant monies be subject to income tax?
Good question. The answer is no, they will not. These are not subject to income tax.
Okay. Taryn McLeod asked the question, if you access the care funds as a sole proprietor, is the grant added to your credit history?
No.
Got
it is not. They are not considered for tax purposes. Congress declared a national emergency and they are providing this information to people without the normal strings attached.
Okay. Beverly Smith asked the question, so we can't apply for unemployment, ... correct? As an independent contractor, the grant is my best option.
So you can do both, believe it or not. Shocking. There's something called that they rolled out in this CARES Act that we'll go over briefly, is the pandemic unemployment assistance. So those are further slides towards the end, and you can get that funding as well.
Okay, great. Thanks for the great questions. Okay, moving on.
Okay. So any more questions or did you get them all?
One more. Patty Morris asked, as a realtor, I have listings but may or may not see sales. Can I still apply for the 10K? So Patty, I asked a similar question, and Colleen knows about this being a former realtor, but there are, one of the things was if you are not making the same income, there was some phrase like that asked the question. So if your income is down, and if you can show that, well, we have a long sales cycle. So, 3 months, 6 months, sometimes it's faster, but I would say a good average is 3 to 4 months. And so we have had closings here in the last week, and we will have more this week. But the fear would be that the sales pipeline is not being filled. And so that means as we forecast out to 2 or 3 months, that could be trouble. And so I asked the same question to Colleen. Colleen, go ahead and address that.
Yeah, so on the SBA.gov site, when you go through the process, again, it only takes about 15 minutes, the things that they're looking for, there's one, were you in business? Did you have a business license on January 31st, 2020? And then they do ask, what was your income from February 1st of 2019 to January 31st of 2020. So that 12-month period. And then they asked, what were your cost of goods sold? Well, some of us are not manufacturers and maybe wouldn't have any cost of goods sold. I believe they were asking that question for people that want more than $10,000 and want to do the loan. However, what I don't know, and it certainly won't hurt to apply, and they tell you you don't qualify, but for people that have a business and haven't had income, if you haven't had income that in that 12-month period, I wouldn't be surprised if you don't get the grant, but I don't know, you might. Brian, do you have any input there? I know.
Yes. Yeah, what I answered was the grant isn't based on income. I think we heard credit score potentially, but then the loan, which is different, but in that same program, is based on your historic cash flows and projecting your ability to repay that moving forward.
Yeah, the loan portion of it is just based on credit score. It's not based on ability to repay or your other loan EIDL programs previously stated that you had to show that you couldn't get credit elsewhere. That no longer is a part of this. And the EIDL program has traditionally been used for disaster areas where there's been a hurricane or the like. So that's how it's traditionally been used, but they're using this process for our current situation that we've never dealt with, in our lifetime, certainly with the pandemic where everything's been shut down.
So a couple questions, Colleen. One from Suzanne Damaso asking, so there are essentially 3 products so thus far. I'm counting 2, but can you answer that?
Well, so you can say a product is a grant, maybe the EIDL emergency grant. Another is the EIDL loan. And then we're going to go over the next section is on the Paycheck Protection Program, which is a forgiven loan. So if she's characterizing it that way, then yes, there's 3 products.
Mm-hmm. Okay. And I think she's clarifying her question here so we can get back to it. Lisa Shumsky asked the question, what if you haven't filed your 2019 taxes yet?
That's okay. That is not a problem at all. The only thing they're looking for is, do you have a tax ID number? And if you're a sole proprietor, it would be you have a social security number that you plug in, and they're looking for the last that you're not behind in your, the taxes that you've paid. I think if you were behind in your 2018 taxes, 19's not due until July, now July 15th, I would say pay your taxes if you're behind on 2018's and then apply, and you should be able to receive it. But that's speculation on my part.
Okay.
No, they're not looking, it's not a requirement for 2019 taxes.
Okay. Clint Thayer asked the question, you said business license may need to be provided to SBA. Is that the same as our real estate license or a separate business license?
No, it is your EIN number. And Brian, what does that stand for? He's not coming off.
Employment identification number. It's your.
So it's a federal.
Yeah.
Yeah. Or if you're a sole proprietor, it's simply your social security number.
Correct.
Okay. Cindy Teitzel asked the question, would things like real estate licenses, insurance, et cetera, be considered costs?
Yes. Brian, what do you think? He's more of an expert in that.
Yeah, that's a tough one, Cindy. Is it related to your service, which is, obviously brokering deals, because there are fixed costs that are separate from your cost of goods. I was just having a discussion about this yesterday with a hairdresser of, their rent is a fixed cost, but their hair dye and supplies and things like that would be cost of goods sold. So I would double check with your accounting professional on that. because that is pretty nuanced for each different industry, including the real estate sector.
But I don't think that's going to impact whether or not you get the $10,000 grant.
Correct.
You could show zero cost of goods sold, but you had annual revenue, and I believe you'll get the $10,000 grant.
Yeah, I mean, another example was a property management company, put zero cost of goods sold, but obviously showed their revenues. So we'll see how their request goes.
Okay, one more question. Sheila Christensen asked, what would someone do who was an employee for all of 2019 and now is self-employed with 1099 income?
So what date did they become what date were they become an independent contractor with 1099 income? If it was prior to, the rule is you had to be a business owner on January 31st.
Okay.
So that's what it goes back to.
What was the February 15th number? What was that date?
That, you know, in the, Brian, help me out here if you can, but the law said February 15th, but I think for some reason, the way the SBA does their processes on a monthly basis, they went back to January 31st.
Yeah, the February 15th date seemed to be related to the coverage period. I think that's applicable to the program we're about to talk about, which is the PPP program.
Any other questions, or can we move on?
We can move on for now, yeah. Thank you.
Okay. We can go back. If you have questions from that prior section, you can just ask those. So now we're going to go over the next section that is more for employers. However, there is the partial unemployment, pandemic unemployment assistance that would qualify and support just the independent contractors that don't have employees. Okay, so this is, I'm going to talk about the 7A PPP loan now, and it's all about keeping businesses open and employees paid. And so as realtors, you guys probably are familiar, especially with the SBA 504 program, which are for real estate purchases. And then the 7A loans traditionally have been for business owners that don't involve real estate. So unlike the EIDL loans, the 7A loans, these PPP loans that we're going to talk about, which again is the Paycheck Protection Program, they are approved through lenders and guaranteed by the SBA. So you'll actually go to a lender to receive these funds, and then those are guaranteed by the SBA, and the SBA pays the lender the funds. So the CARES Act expands the 7A program to include this PPP portion, and it addresses business disruption caused by the COVID-19 crisis. And the intent is it's to allow businesses to retain their employees. So most small businesses in operation on February 15th will be eligible for the program. So loans are 100% federally guaranteed. Normally, as Brian could tell you, SBA loans aren't normally 100% federally guaranteed. They're 50, 60, 70, 80, 90%, but not 100. So that means there's zero risk to the banks. If you did not pay all of it back, the bank has no risk. That's why all the banks are jumping on this. They can get interest and they get paid by the SBA for doing these loans. So Congress appropriated $349 billion for these SBA loan guarantees, a whole lot more than the EIDL process. EIDL was only $10 billion, whereas this is $349 billion. So what's required on this? is, you have to have been operational on February 15th, and you have to be able to show you had employees that you paid a salary and payroll taxes, or show that you paid independent contractors. So those are, the big high level requirements. And so what's not required compared to traditional SBA loans, there's no personal guarantee requirement. There's no collateral requirements. That's unheard of, Brian can definitely tell you. And applicants you don't have to establish that you're unable to get credit elsewhere, which is a requirement of all the prior SBA programs. And they will not even evaluate your repayment ability.
Hey, Colleen, one thing to clarify that I saw on one webinar, so take it with a grain of salt, is even though there's not collateral requirements, the SBA will likely continue to secure whatever they can as it exists. So we'll see in the final guidance if that's the case, but don't be surprised if you have a free and clear car title or equity that they want to slap a lien on.
So, but I would say that would be in the case where you didn't spend the money the way they're directing you to spend it. And so they would go after you if that were the case.
Yeah, great point.
Or wasn't there another part of the deal was that they are saying they're calling it a loan first, but it's going to be forgiven, and it's going to be forgiven because you've got employees. They want you to retain your employees. They're giving you this money, 250% of what your normal monthly costs are, but they want you to hold on to those employees for 2 years. And at the end of 2 years, I imagine if you collected this money and then didn't retain your employees, that they would want some sort of recourse to get the money back. Is that accurate?
Well, I don't think the 2-year requirement is the case. Let's go through that here. I don't think it's as long as that, but let's go through this.
Okay, well, let me, just because I think now we're getting into those who have employees and payroll. If you don't mind, just for a second, let's catch up on some questions.
Oh, sure.
It's probably going to be more for the EIDL, for the grant, the 10,000K, or 10K. So Lisa Roberts asked the questions. First of all, looking at the form, would trade name be real estate? ? And what does organization type mean? Seems as though, yeah, yes and yes, that it would be real estate, and that the organizational type would be real estate as well.
Yeah,
Yes.
Michael, I'll take a stab at that too. The trade name should be just how you go by your business. So for most of y'all, like Lisa Roberts, realtor, and your org type is what your structure is as a business. So again, many of y'all are sole proprietors, independent contractors.
Some are LLCs though as well.
Yeah, and Jake had asked earlier about S corps. So that's your org type, is how you're structured as a business.
Mm-hmm.
And Taryn McLeod asked, if you are registered as an LLC, must you register with the EIN, or is there an option to register with the Social Security number?
My understanding of LLCs is you should have an EIN, but if you're not sure which one you have, you can look at your business license. Actually, I'm sorry, that wouldn't be there. You look at your tax return and see if there's a separate tax ID for the LLC, but I believe every LLC I've heard of has a separate EIN versus sole proprietorships, which use their Social Security networks.
Yeah, I'm not really sure about that, because LLCs are pass-throughs. So yeah, I'm not positive about that, but I would go back to your last tax return and see how you filed. And if you filed using your Social Security number, I think that's what they'll tie it to. And if you filed with an EIN, then you should probably look to that, because that's what they're going to be looking at, is your last tax return. Does that make sense to you, Brian?
Yep, that's a great answer. And that reminds me of, yeah, the LLC being a disregarded entity, which would use your LLC. So it depends, Taryn.
Yeah, I'd go back to your 2018 or 2019 tax return and see what number you used for that. And that's what they're going to connect to. Okay, I'm going to go to the next slide. All right, who's eligible? Eligible recipients include not just the traditional small businesses with fewer than 500 employees, but also 501c3 nonprofits, veterans organizations, tribal concerns, or individuals who operate as under a sole proprietorship or as an independent contractor, and certain self-employed individuals. That's directly from the information off of the CARES Act, the direct law. To receive an application, you must certify. So this is where it is really important, that you have to certify that the loan is necessary to continue operations due to the current economic circumstances. And then you have to acknowledge that the funds will be used to retain workers and maintain payroll, to make mortgage payments, lease payments, and utility payments, and that you do not have other covered loan applications pending for similar purposes. So if you applied for the EIDL and you're trying to get funding through that, that needs to be resolved and addressed. You either need to receive it, it can't be pending, and then you go get the PPP. That needs to be processed first. Yeah, Brian, do you have anything to add there?
Nope, I was just answering a question from Patty, but yeah, that's correct, what you just described.
Okay. So how can you use these proceeds? And again, this is for the PPP loan that is forgiven. You can use it to fund payroll costs, and that means salaries, wages, commissions, similar compensations, including tips, vacation pay, family, and sick leave. But you have to ignore any amount that exceeds $1,000 per year for any person, and not taking into account payroll taxes imposed on the employer or withheld from the employee. So let's say you paid yourself $200,000 per year, you can only consider, when you calculate the 2.5 months that, or I'm sorry, you can use these funds for paying yourself up to, and again, they're looking at a 2.5 month period with these calculations. You're looking at the monthly amount that you pay yourself up to $8,333, which is $100,000 divided by 12. And then plus any payroll taxes that are associated with that from the employer side. So, and then it also covers all state taxes assessed on the compensation of employees, any severance pay, you can use it to cover any costs related to health benefits and retirement benefits, and any interest payments, not principal, but interest payments on pre-existing loans. So it has to be a loan that you had taken out for your business prior to the borrowing the funds. And it also can be it can be used to pay rent and utilities. Okay, I'm gonna move on. Do payroll costs include paying myself? The answer to that is yes. And it says that it also includes compensation or income of a sole proprietor, independent contractor. So that means your own wage or wage you pay a family member. It means commissions, and it also means including income or net earnings from self-employment. And again, that's capped at the $100,000 prorated for the covered period, or $8,333 per month. And so what's the maximum you can borrow? It's the lesser amount of, and I don't think 10 million, so it's it's the lesser of $10 million or the amount equal to 1 month of payroll costs. And then you have to consider, though, you have to cap that at $8,333 per month, and on a trailing 12-month average basis multiplied by 2.5. So essentially it was, let's assume you're not paying yourself more than $83.33 a month. It's all of your payroll costs times 2.5 months. So 2.5 months worth of payroll costs, generally speaking. So an example is you make a loan on May 1st to a business. So you're a business owner, you get a loan on May 1st with an average monthly payroll cost. And for the period from May 1st, 2019 to April 30th, 2020, and the of $20,000, then the maximum loan amount would be $45,000. And there is a calculator on our website. If you go to chooseclallamfirst.com and go to the webinar link, there is a calculator there that you can download and use. It's just a really simple Excel spreadsheet. And I'm sure Brian will have it on his website here shortly, soon, if it's not already. It's a little bit complicated, but that's how you can determine how much you can borrow. That's why and as you'll see, this loan is forgiven. So you can borrow a whole lot more than $10,000 without having to pay it back. So if you have employees, this is likely the way you want to go rather than the idle loan process.
Okay, so a couple questions, and I think you were just about to get on that, and that's Sheila Christensen asking, what are the requirements to be forgiven the 2.5 times payroll amount?
We'll get to that. This is the next slide.
Okay. The question from Andrea Raymore, if we get this PPP and pay employees, does it make them ineligible for unemployment?
So yes, if you are keeping them on, they cannot get unemployment.
Yeah. And that's one of the conditions of that PPP is that they're literally trying to encourage you to not lay people off.
Right.
So you would not be laying them off, and therefore they wouldn't be getting unemployment. Clint Thayer asked the question, I'm assuming then that this loan product does not really affect employed agents that do not have employees. That answer is yes, right? Yeah. Yep. Yeah. Okay.
Hey, Colleen, if I can pile on to the answer for Andrea about paying employees, making them eligible for unemployment. I'm not 100% sure about this, but if you got a loan to keep folks employed, but you had to reduce their hours, it's possible they may also be eligible for the Share Work program with Washington State. So check into that. But as Michael said, yeah, the intent behind this is to keep everyone fully employed at their regular rate, which will be the highest through full employment versus unemployment benefits.
For most cases, but one of the last slides we'll go through, people actually make more on unemployment than they do depending on what their wage was. Based on the increased unemployment, the federal, with this new CARES Act, they're adding $600 per week to unemployment. So depending on what your wage was, it could be you actually make more money on unemployment, which is totally a disincentive for people to stay working with their employers. But if your employer offers you your job and you turn it down, I do not, and this is a question I posed to ESD and we haven't heard back yet, I do not believe that you are qualified for unemployment then. So it gets really complicated.
So Sheila Christensen asked the question, what if you use the PPP for employees and the slowdown lasts longer than 2.5 months, and then the employees go to unemployment in mid-June? So the 2.5 months, it's really 1 month is where they're figuring this, and then they're just basing it on 200 times 250%. So I don't think there's a 2.5 month really clip. That
okay, so you take what was my average payroll cost last year? I'm using, last year, and let's say it was $15,000. And so what you can borrow is 15,000 times 2.5. Now I'm going to get into the forgiven portion here, but that's how much you can borrow. So, and then there's pieces about what if they don't stay on. So we'll get to all that if you can just hold a couple slides. Okay, so what are the terms? The interest rate is capped at 4%. The maximum maturity is 10 years. And again, you're going to be working with the lender on this. So you'll you'll be talking to them about it and negotiate it. There's no prepayment penalties and there are no fees to the borrower. So, I mean, this is kind of unheard of stuff. Principal and interest payments are deferred for at least 6 months, but not more than a year, but interest will continue to occur during the deferred period. And again, you'll negotiate that with your lender. Presumably, some lenders will offer a full year of deferral, whereas others may only offer 6 months. And so those rules and programs will be coming out shortly. And PPP loans can also include the outstanding balance, the outstanding amount of an idle loan made between January 31st, 2020 and the date on which such loan may be refinanced with the PPP loan. So if you borrowed, say you borrowed $30,000 from through the idle process, and then through this process you realize, well, hey, I can get $25,000 forgiven on a PPP loan. I want to refinance so I don't have to pay $20,000 back, and then you'd only owe $5,000, the 30 minus 25. But anyway, those are all individual scenarios. So, so now I'm getting into the forgiveness piece of this. PPP loans are eligible for forgiveness, and that amount forgiven is excluded from your gross income on your taxes. Once again, most realtors should qualify for forgiveness of a loan principal up to the amount paid by the business during the 8-week period after the loan is made and for the following operational expenditures. So qualifying payroll costs that we went through before, interest payments on any mortgage, including mortgages on personal property, covered rent and covered utilities, power, water, transportation, telephone, and internet. So if you are spending the money on any of these items, then during the 8-week period, then you should be forgiven the amount that you took out. Brian, you want to add anything there?
No, but there was a question Marta had about if it includes health insurance premiums as payroll, and I'm looking at that right now, so I will respond as soon as I find out for sure, Marta.
That is health. It's group health or any retirement benefits are. Yeah. So you get to include that in your how you calculate payroll costs, and then you can. That's a qualifying payroll cost when you spend the money. So, how to receive forgiveness besides prayer? You like that, Michael?
Brilliant.
In each case, you must show your lender documentation to prove those obligations existed as of February 15th, 2020. So you can't bring on new debt as an example, and then the SBA then pays the lender for an amount that was forgiven. So the process is you're going to go to a lender after the lenders figure out, you know, what programs they have. Will they allow you 6 months of of a deferral or 1 year? You choose which lender you want to work with, and then you will then from that point borrow the money. You'll figure out using that payroll calculator how much money can I borrow, and then you do the application with them. They will give you that 2.5 months worth. Interest starts accruing right away, but there are no fees associated with it. You'll be required to pay back somewhere between 6 months to a year, but there are no prepayment penalties. And then then after the 2.5 month, after June 30th, I believe it is, Brian, is that right? Then you'll be able to go to them and show them, hey, this is how I spent all the money that I received from you. And then they will then say, okay, that amount is forgiven. You know, you don't have to pay us back that amount, and they'll get the money from the SBA. So it's really the federal government that's paying for this money, not the lender. So the amount of the loan is subject to forgiveness, and it may be reduced if employees are terminated during the covered period or compensation is reduced by more than 25%. So Michael, when you were saying the 2-year period, it's the covered period is, and Brian, you have that there in front of you, the covered period?
Yeah, but the term you just referenced is correct, up to June 30th. But what was the question about the covered period?
Well, I just wanted to go back and make sure that in the PPP section of the CARES Act, that it defines the covered period as only through June 30th. Because Michael had mentioned 2 years, and that was something I didn't recall ever seeing.
I'm confirming that right now, but my understanding, the covered period ends on June 30th.
Yeah. So
Okay.
none of the loans subject to forgiveness may be reduced if employees are terminated during the covered period or compensation is reduced by more than 25%. So as I understand, as long as you don't lay people off through June 30th, you get that money, except for the interest. The principal free, and if you had the wherewithal to do it, you could pay it off after June 30th. And so you've paid very little interest on that 2.5 months worth of payroll costs.
Okay. Simone Nichols asked the question, what if the pandemic continues for more than 2.5 months? And I would probably expand on that question and say, you know, even if the pandemic miraculously ended in 2.25 months or 2.5 months, the economic fallout from this could last much longer. So I have to imagine that at the federal level, they will be talking about that in the next couple months. Is there going to be a round 2, et cetera, et cetera? I'll let you guys talk to that.
Yeah, and Brian and I were on a call yesterday with Congressman Kilmer, and I had a conversation with Senator Cantwell yesterday, actually, and then also her state director. And the expectation is that that there will, in April, Congress is going to go back into session, and they're considering this a relief package. And then in April, they're going to do a stimulus package and fix any bugs from what they've created. But the intent on a stimulus package is primarily going to be for in construction, which I've shared concerns about that for us, saying that construction, if it's federal money, then it has to meet the Davis-Bacon Act, and it pays really well. But typically on big construction projects that are government funded, public works projects, so think about schools. Do you see a lot of local businesses and local employees working on these public works projects, on port projects, on road projects? Very often it's companies from out of the area, and it's people that don't live in the area. There are some that do, but it's not going to be a fix for a failing economy in Clallam or Jefferson County. Because of the current procurement laws that are in place, much of those contracts and jobs end up going to businesses and people that don't live in our area. So I've been working with them on some solutions there, and that's another discussion, not for today. But yeah, there is a second, an expectation, and Congressman Kilmer and all of our congressional delegation is asking for ideas right now on things that should go into a future stimulus package that will help rural. Brian, you want to add anything?
No, exactly the same. Through Congressman Kilmer and others, it's just understanding that there's a likelihood of needing to go back to the table. I guess to put it in a different way, somebody had asked, what happens after June 30th? If things go unchanged and your loan is forgiven after June 30th and you are unable to keep staff at full time or whatever the case may be, or have to lay them off, then unemployment kicks in at that point. But I think the assumption that Colleen and I may be making with what we're hearing from our lawmakers is they're, again, preparing to go back to the table to look at this through a longer lens than just that June 30th period.
Okay.
Colleen, second, just a couple questions. Marta Ray asks, is the interest forgiven as well?
No.
Okay. An anonymous attendee asked, on the SBA site, in the box for the account ID or social security number, it will not accept the social for an independent contractor. They probably need to give their EIN, is that right?
So if I know, I helped some people and they just put their social in.
Okay.
It doesn't look like it because it's a 2-digit, then a dash. Good morning, Nicholas. But there are enough digits there for a social security number.
Okay.
On that bill.
So Sheila Christensen asked, or I'm sorry, we'll go back to Lena Washke's question. Will the payroll cost be evaluated on an employee-specific basis or total payroll for the covered period?
Total payroll.
Okay. Sheila Christensen asked, as I understand this, I have employees February 15th. I can use the PPP to pay them 2.5 of their monthly wages 2.5 times of their monthly wages with forgivable amounts, but I need to pay them full-time from now to June 30th. The question is, employees need to be paid their full-time wage.
So
employees need to be paid their full-time wage.
You can borrow, again, I'm better with examples. Let's say your average monthly payroll from the last year was $10,000. Then you can borrow $25,000. Now you'll get that money. A bank will give you $25,000 and interest starts accruing right away. But then after June 30th, you go back to your lender and you say, look, this is how much I paid my employees. And if maybe you laid somebody off and you had 2 employees and now you only have 1, only half of that will be considered forgiven. So instead of $25,000 being forgiven, only $12,500 would be forgiven. And then you have to pay interest on all $25,000, which again, at a low, this is a 4% rate. So, June 30th, say if you got it on May 1st, that's only 2 months. So 4% divided by 12 is 0.33 times 2 months. And then at that, if you borrowed $25,000, no, that's wrong. Anyway, it's not very much interest. Let me do that again. Sorry about that. It's 4% divided by 12 times 2 if it was 2 months, and then times $25,000. That'd be $167 that you'd pay in interest, and there's no prepayment penalty. So if you paid it, 2 months later after you got the loan, after you've proven to the bank that you kept your employees on. Now, if you laid somebody off and or you reduced their salaries, you don't get the full amount forgiven. If you reduced your employees by half, or you only paid them half, you get half of the amount forgiven. Is that clear?
Yeah, I think so.
Okay.
So Pete Rutherford asked, if we are trying to receive both grants/loans, do we apply for the 10,000K first and wait until it's received before applying for the PPP loan? You would want to do them together, right? I mean,
Well,
the 10,000K is going to happen faster. They're saying that's a more streamlined process.
yeah, but if you're talking about the PPP, you have to wait till the idle loan is completely processed before you get through this PPP process. So there can't be something has not been, if you're applying, you can't do both. It has to be, if you do the idle loan, you do that side of it, and they'll close that out, however that's going to be handled. And then after that's done, you can go to the PPP because it's not in process.
Okay.
Colleen, pile on there too. Part of Pete's question may relate to one that Cindy Teitzel had asked, and that is, can you do both programs? The answer is yes, but one thing to keep in mind, if you receive the 10,000 idle grant and then later participate in the PPP loan program, that $10,000 will be deducted from the forgiven calculation on the PPP. So the net benefit is there and zero, but you wouldn't come out $10,000 ahead if you were successful in both programs.
Yeah. And
Nicely said. Thank you.
Would you say basically if you need cash quicker, then the answer would be to go ahead and go that route and do both? But if you think that your cash needs are going to be more drawn out, then maybe it just makes sense to do the PPP. So it's just one process instead of two. Would you agree?
Yeah, less paperwork.
Okay. Pete Rutherford also asked, as in most SBA loans, are there preferences for veterans/disabled veterans owned businesses?
Right. Everybody gets the same in this.
Okay. Got it. Okay. Thank you.
Mm-hmm. All right, next slide. So who to contact? Again, this PowerPoint will be available on our website under webinars, and so you can get this link afterwards. And the list is expanding, and I know Sound Community Bank, First Federal, and Key Bank and Kitsap Bank all are going to be offering this program. We know that many local, that's what I just said, lenders are compensated by a percentage of the loan size on a sliding scale from 5% of loans under $350,000, whether or not it's forgiven, to 1% of loans over $2 million. So they are definitely incentivized to lend their money out to business owners. But that is not anything you pay, that they will be paid by the SBA, our federal government, for that.
Great. So if you'll allow me, I'll save you two from making the EDC pitch. There is obviously this is a benefit. Thank you both for helping us today understand and navigate through this in this pretty unprecedented moment. The EDCs of both Clallam and Jefferson County are largely, correct me if I'm wrong by using the word largely funded by membership. And so we encourage realtors, real estate offices, et cetera, to join the EDC. The annual cost of membership or doing so is?
Well, it's different, and I don't know that EDC Team Jefferson has paid members. I don't know. I know Brian's is a little bit different than ours, but ours for an individual, it's $150, and for larger businesses, it ranges from $500 to, you know, we've got $1,000 memberships, but typically it's for a single entity that's doing business where you get business advising, that kind of thing, it's $250 annually.
Okay.
Yeah, thanks, Michael. We're a little different. We're always accepting sponsors for our various programs, a lot of them education-based, lean thinking, and the like. So if you're interested in attaching your brand to that, we'd love to chat with you. Otherwise, our services are taxpayer funded, and we encourage you to check out our partners at the Chamber of Jefferson County. Membership with them starts at $150 a year, and we work very closely with them to try and deliver seamless service to you, the businesses.
Awesome. Thank you, guys.
Thank you.
Okay, so this, we've got a lot more slides here, and I know, I think for people that are independent contractors and do not have, and don't have employees, the only section that they might be interested in is the portion on the pandemic unemployment assistance. So I am trying to find those slides right now on that section, and I'll jump to it, do that. And when I do this again, I'll switch the slides around. So that's emergency paid sick leave, examples, expanded unemployment benefits. Okay, so I'm gonna go back here and share my screen again. Let's see, share screen, and I'm gonna do that one. Share, and not from current slide. Okay, so relief for expanded unemployment assistance. So actually, this isn't on the pandemic yet. Let me find that. Unemployment assistance, covered individuals. You know, I don't know that I included this in this set, so I apologize for that. But there is pandemic unemployment assistance, and we do have some information about that on our website, where even if you haven't paid into the unemployment process, there are funds available to you, that program. So I'm just going to leave it there. But our intent was not to go over this in a really thorough manner, just for time's sake, but there have been expansions of the emergency family and medical leave requirements, and an expansion of the Emergency Paid Sick Leave Act. But they're pretty complex, as you could probably see as I scroll through these slides. And this information will be on our websites, so you can take a look at that on our websites. And then additionally, and there are some things we didn't want to get into this in great detail because we think there are errors in what was passed. As an example on this one, special rules for employers with fewer than 25 employees, we think that, and we're waiting for guidance from Department of Labor, we think that was supposed to be with more than 25 employees, because these requirements make it more onerous and doesn't seem logical for small employers. And also there's not clear guidance from the federal government to the state that under the Emergency Paid Sick Leave Act, requirement that starting on April 1st, you have to offer 80 hours of sick leave to your employees that have not been laid off at no cost. And for businesses where cash preservation is so critical, that just pulled in a huge new expense for them. But then the expectation was, oh, well, they'll get this payroll protection program. However, if somebody is sick with coronavirus or that kind of thing, then that totally makes sense. But there is concern based on some memos that came out of the U.S. Department of Labor that the governor's edict for stay home, stay healthy does not qualify as a quarantine from the Department of Labor, so therefore you would not get reimbursed through payroll taxes. So I don't want to get into, they haven't come out with the final guidance there, and we're all waiting for that with bated breath. But there's lots of conversations, lots of email traffic happening right now, waiting for us to understand all the guidance from the Employment Security Department and L&I. So anyway, there are all of these slides. There's one other thing I want to go over with you at the end. And so I will go over these examples though, quickly, if that's all right. And these came from the attorney, Chris Riffle at First Fed. That's why he did a webinar for us, and that's why the First Fed logo is on there. Employee reports that her doctor believes that she has COVID-19 and recommends that she stay home for 3 weeks. She isn't going to be tested because she's not in a high-risk category. Do I have to pay the employee until she can return to work? And the answer is probably. And telework, assuming the need begins on April 2nd, and actually this now has been clarified that it begins on April 1st. First consideration is whether she can work from home, even with symptoms. People have reacted very differently to the virus. And then next, no telework. Then under the emergency PSL, she's entitled to be paid 80 hours of sick time at regular pay, up to $511 per day, or for 2 weeks, $5,110 in total. And the FMLA may also apply. And then you've got also the Washington paid family and medical leave. So there's all sorts of different details that go into this. And so that's why we recommend you contact one of our business advisors that can work through this information with you at no cost, so that you can, understand exactly what the requirements are and stay out of any hot water with the state or feds. Here's another example. Employee wants time off beginning April 6th to care for her friend who has been quarantined. Her friend is not a family member and under FMLA or the paid sick leave laws. Does the employer have to give the employee time off? Probably. Does the employer get paid for time off? Yes. And here's another example. The school my employees' children go to has been closed through at least April 24th. Employee has worked for us for 6 months. Does EFMLA apply? And again, the answer is probably. So again, detailed answers there. This is, and then if you are laying people off, there's relief for eligible employees, which is a typical employee that would get unemployment if they were laid off. And then also, this is the piece, covered individuals, workers not eligible for unemployment and benefits. It includes self-employed workers. So that was the question before, independent contractors in the gig economy who are impacted by COVID-19 and unable to fully work, but not otherwise eligible for state unemployment benefits. So I didn't think I included this, but here it is. It's the pandemic unemployment assistance is retroactively applied to January 27th and lasts until December 31st. In addition, so this is independent contractors or covered individuals will receive an enhancement of the pandemic unemployment assistance of $600 per week enhancement for 4 months or until July 31st, 2020. Covered individuals receive an additional 13 weeks of pandemic unemployment assistance on top of the normal 26 weeks for a total of 39 weeks. So the pandemic unemployment assistance is I believe $200, and then you get an additional $600. I have not really gone into the basics of that yet, so that's something that I think business advisors should be helping each business owner on how to go through that process. And again, Employment Security Department just received all these new requirements on Friday, and they are in process of establishing the processes on their website. It will be coming out sometime soon. I've asked that they do another webinar for us on Friday, and I haven't heard back yet, but so that they can explain this pandemic assistance. So those details are coming out and yet to be covered. So here's a definition of covered individual. I'm not going to go through that. And then again, what I talked about is the different programs that our state has: shared work, partial employment, and standby, or there's a permanent layoff. So those are the different options for a business owner if they are going to lay somebody off. There's the full layoff or these different programs. And these are links to the ESD site. So again, you can click on this and find more information if this is a process that you think you need to look at as a business owner with your employees.
So Colleen, a couple questions real quick.
Yep.
Kind of going back from the Family Leave Act, but question from Clint. I'm assuming then that this loan product, and when he says this loan product, I'm assuming talking about the PPP. It does not really affect self-employed agents that do not have employees. That would be correct, with the exception of maybe if you had formed an S Corp for yourself, or if you're an employee in your own LLC.
Right, right. So if you're paying yourself a salary, a monthly amount as a S Corp or even C Corp, then you can, and it's more than $4,000 a month, because otherwise, 2.5 times your payroll, if your payroll costs are less than $4,000 a month, you're better off doing the EIDL loan, because 2.5 times 4,000 is 10,000 bucks. And so it's that EIDL grant process of receiving that $10,000 is really easy, and you should go that route. Whereas the PPP is you go through a lender and you got to provide a lot of paperwork. So if you've been paying yourself, say $6,000 a month, you might want to look at doing the PPP process. You'd get more money through that process as a forgiven loan.
Okay. And then last question is, Sheila Christensen asked, can someone apply for unemployment as a real estate broker and apply for the $10,000 EIDL grant?
So Brian, help me out here. I think the answer is yes. You can't, as an independent contractor, you're not applying for unemployment. You'd be applying for the pandemic unemployment assistance. So it's a little bit different, but they are offering $600 per week. Now understand that is taxable income. The $10,000 is not taxable income. So if everything, stops and no one's doing any more real estate for the remainder of the year or something, you could get the $10,000 and then you can apply for the pandemic unemployment assistance, which is up to, and you have to be able to show to ESD that you need that. and I don't know what those requirements are going to be. Again, they're just creating the process. And they, by the way, you know, they are so overwhelmed. In Clallam County, they went from 122 applications for unemployment to 1,053. So, you know, they're overloaded just because of that. And then now they've got to create all these new programs and administer them. So they're hiring at least 100 people initially, and they'd all be teleworking. And then they're going to hire another 400 to 1,000, they said. So, you know, they're doing all they can, but they are just overloaded. I know they were working all weekend long.
Yeah, and I'll pile on too, Sheila. One thing that they stressed on calls with them last week is if you apply through the traditional channels for any of the programs, including the new one that Colleen was mentioned, and you are denied through their automatic eligibility determination, please keep having your case reviewed. It's just, there's, I don't know if they described it as a glitch in the system or not, but basically their current system is operating under the old rules. And so they're having to build a system that will reflect the expanded benefits that includes self-employed.
Yeah, and so you're talking unemployment benefits. If you have an employee that applied under standby, which standby means this is not a permanent layoff. This is, if I can call you back, I will be on standby for me. A lot of employees received and employers received rejection letters, and that is because the normal process is you cannot apply for unemployment until you've been laid off for at least 1 week, but they waived that, but they had not updated their software system yet.
Okay, so, oh shoot, Sheila had a good comment here a second ago. And I was going to read that out and it disappeared right as I was going to do it, but basically said that the pandemic assistance, there's going to be a place for realtors to go on that. I think she probably got that information from the state, but for now to definitely go for that EIDL $10,000 grant. So thanks for that, Sheila.
Yeah, Michael, that was my bad, but you paraphrased it perfectly.
Reading comprehension, one of my things.
So one thing I want to point out that's is interesting to me is that, so I got this from the esd.wa.gov website, and this was created prior to all these new rules that came out. But so, you know, the way they calculate things is you look at the average of the 2 highest quarters in the last 5 quarters where you worked, and that's how they figure out what your unemployment benefits should be. So if let's say the amount you were going to get through unemployment was let's see, that if the average of your 2 highest quarters was $7,100, or that equals about $23.67 per month, then that's the equivalent to someone making $13.68 per hour. So, and then they figure out what your weekly benefit amount would be. And so if your average of 2 highest quarters was $7,100, then it used to be the weekly benefit amount you get for unemployment is $273. But now, under this federal enhancement that is going on until July 31st, they added $600 to it. So now you'd be getting $873 instead of $273. So, and if you divide that by 40 hours a week, that's the equivalent of $21.83. Whereas before, if, you know, when they calculated how much you were making to determine what your unemployment was, that would have equaled $13.68. So the bottom line here is that for a lot of people, depending on what their wage was, they could be making more money on unemployment. So it may be that you're actually through these different programs, that your employees could get more money if they are on unemployment than if you keep them on payroll and you go through the whole PPP process. So just something to consider. So anyway, any questions? And again, a link to this webinar, recorded webinar, will be on the chooseclallamfirst.com/webinars. That's also where the slides will be, and it's also where the payroll calculator will be located.
Okay, so a couple questions. One, Lisa asked, so the average of 2 highest quarters from the past, how many quarters? And it was 5, right?
5.
5. Okay, and that's for that, the pandemic assistance?
That's for, no, I'm not sure about that. That is for regular unemployment insurance.
Sheila Christensen asked, is there a quick and easy link to the IDLE app website?
Yes, so that is, and again, we will, the IDLE website is just sba.gov, and we do have a video where I go through, I did it yesterday, on how to do this. There's some weird little quirks with it, with putting in your phone number and the like. So I think you could try to do it. If you're ending up having problems, you can look at that video. I believe, Peggy, if you can come off mute, where do we have a link to the video? Maybe Peggy's working, not sure. But we do have a video. I will make sure it's up on this same site, chooseclallamfirst.com webinars. I'll make sure the video's there as well. I can't hear you, Michael. You're on mute.
All right, thank you. So it looks like Brian just posted a link here in the chat section of this webinar for the IDLE application link, the $10,000 grant. So, and then also the website to go to for a lot of this information, Colleen, is called chooseclallamfirst.com. Thank you. Yeah, so that would be another place to find resources for this. Yeah.
Okay.
Okay, anything else?
No, thank you for joining us.
Yeah.
And, yeah, you can send people to this location if they have questions, and then if they're in Jefferson County, contact Brian Koo at director@edcteamjefferson.org or me at cmcaleer@clallam.org.
Awesome.
Yeah, thanks Colleen and the Clallam EDC, and shout out to First Fed for a lot of the content we shared today.
I see we have 5 new questions. Or are those not?
No, those are people. One is Taryn McLeod. I think she says she's either asking for or offer. I think she's asking for a link to the PUA application. And then the rest are just people saying thank you. So,
okay.
Thank you. You're welcome. Yeah, and thank you, Colleen and Brian. Really appreciate your taking the time to walk us through this. It's going to take us all working together to get through this, huh?
Yeah. There are lots of resources though, and so I'd say stay tuned. We and Brian, we send out lots of, get on our constant contact list. We'll send out new updates and email either one of us to get on that constant contact list. Make sure it doesn't go to your junk spam folder. And as things come out, we will keep you posted.
Awesome. Okay, thanks everybody. Hang in there. Be well.